Good evening and welcome. My name is Isabel Zen and I am the speaker for this evening. So we also have another speaker coming up in just a moment, and we are very thrilled that you're joining us on our first ever webinar for the year. It's titled Mastering Structured Warrants, Unlocking Opportunities in Hong Kong's Volatile Markets. And as you know, we have one of our top speakers, Mr. Johan Lee. I'll be introducing in just a moment. But first, I just wanted to recap what we've done over the past few years. For those of you who have just met me for the first time, if you see my face for the first time, please press 1. If you've attended our webinars a few times before, press 2. If you've attended it twice. If you've attended it 3 times, press 3. If you've attended it 4 times, press 4. If you've attended it more times than you can count, press unlimited. I don't know. There's no infinity sign on the keyboard, right? But let me know so I know the standard of the participants, like you guys attending today's talk, and I can curate it as we go along. We're doing this live, of course, so I can see a few people talking to us. Aliza Ali. Well, just so you know, one of my hobbies, they include Star Wars. I like trading, I like investing, and I also enjoy disturbing my friend Aliza Ali. If you're not sure who she is, you can Google her and disturb her back. But today, we do have a few things going on. So in 2020, we started our webinars for the very first time. And we had 15 webinars in 2020. 2021, we had 15 webinars as well, with multiple speakers and partners. And in 2022, 10 webinars. And 2023, this year, we're going to have 15 talks and webinars, physical and virtual. So another question for you, if you are interested in more physical webinars, can you please let me know? Can you just type on the screen physical? And if you want virtual, just press Zoom so I can gauge. So next time I know whether I want to have more physical webinars, physical talks in KL or wherever you are. Maybe Kuantan, Penang, Johor Bahru, Kuching, KK, or if you want us to have Zoom and focus on that. Okay, I just want your feedback. I want to hear a bit more from the ground, all right? So without further ado, I want to introduce you to our first speaker. He's going to be talking about unlocking opportunities in Hong Kong's volatile markets. He is the Chief Investment Officer for Honghu Capital Management, Mr. Johan Lee. And then we'll have 1 hour later, we have a Q&A first with him. And then we'll have a 1 hour section on structured warrants. Everything to do with HSI structured warrants, which are the sexiest thing in the market right now, which we'll talk about. So can you hear us, Mr. Johan Lee, all the way from Hong Kong? Hey, Johan, nice to see you.
Hi, Isabel. Thank you, Isabel. Thank you, Pinanga. Hi, everyone. My name's Johan. Yeah.
Hi.
Hey.
Johan, you are our most popular speaker when you give commentaries on Hong Kong markets. So I'm sure our participants are very excited to hear from you, since they haven't heard from you since last year.
Yeah. Thank you. Thank you very much. It's quite a while since last time. Yeah. Right.
Yeah, that's right. That was about in November, October last year. So anyway, let's get to it. Mr. Johan Lee, over to you. Always a pleasure.
Sure. Okay. So today, I'd like to talk about HSI index and the market updates. First of all, I would like to put on some review. Since last time, it's the third quarter of 2022. So I just want to have some figure delivered to you guys during Q4 2022. The HSI was trading at 17,000. That was the beginning of the quarter 3 last year. And then HSI was trading right now at 19,250. That's today's closing price. And you will see, actually, it wasn't too bad, but if you could recall last year, the top is like 28,000 something. So it's actually went down quite a lot. The highest close during this period of time is 22,700 points. It happens on January 27th this year. And then the lowest points is actually last year, October 31st. It was closing at 14,688. So you could see the whole period.
Oh,
from,
Mr. Johan,
Yes.
I would love to see a screen. So do you mind sharing the screen? Just a reminder.
Oh,
As much as we love looking at your face.
okay.
Can we see Mr. Johan's screen yet?
Yeah, I'm sorry. Yeah, that's
No problem.
Okay. Okay, so actually this is the screen I should pull up before. Yeah. And then this is the first slide. Okay. So
Put it on full screen and then we can continue.
yeah. All right. Okay,
Beautiful.
so
Thank you.
Thank you. Sorry about the issue. So the lowest point was closing at 14,688. It was on last year, October 31st. You see that it's very volatile last year and even this year. Q4 2022, it was ending at 19,900. And the full year, it has been dropping 3,035 points for the whole year. And the difference between the highest close and the lowest close in 2022, it was 10,353 points. That's almost 1/3 of the Hang Seng Index from the peak. So I would say last year is a very fertile year, and then in October, we have a big rebound from 14,000 area, and then rebound back to the recent high is in January, 20,700. And for the tech, it was Hang Seng Tech Index. It was down 18% last year. I would have a chart to look at to show you guys a chart about the Hang Seng Index on that was the yesterday close. You see here it was the low last year and then have a great rebound from October, and then it's a very nice channel there, and then until January. I remember the tipping point is US shoot down the balloon, and then I think it's here. There's a rebound from the recent low, and then has a nice rebound, and then the US shoot down the balloon from China, and then the markets continue to sell off. Okay, so right now we are sitting at 1900. I think the market should have a support at this level, and should be range trade for the rest of the months. And then for the Hang Seng Tech Index, it was quite volatile too. It went up from 3,000 points and then all the way back to 4,800. And then it resumed another downtrend. And then we have a very nice support here as 3,800. I think for the rest of the quarter this month, the index should hold up above that level. Okay, then now we could talk about we could take a look about the sector performance for the last 3 months. Now the the Hang Seng Index component has the best performer, which is the telecom sector, which include the China Mobile, China Unicom, and some other telecom equipment company. And the other and it was outperformed the market and has a 21% return for the 3 months. And then the worst performer sector is the properties. It's worse. It went down 5% for 3 months. So basically, this chart you could show you could see the after the telecom. Yes, it was a semiconductor and then media. On the other side, you could see this fund flow. That means people from China and then foreigner, they keep pulling money into sectors like software and healthcare. But it does not mean that these sectors perform as good as the telecom. And later on, I could explain why. Okay. I would like to share some of the key events recently happened in the US. Last week, the Silicon Valley Bank, SVB, has a big issue. It becomes the largest closure of the United States since the global financial crisis. If this is a very big incident because if the credit issues further affect other financial institutions, the market may become may have a systematic risk. Investors should not underestimate the negative impact of this events in the next few weeks. And the risk is driven by those risky assets that could not be sold because there's not enough liquidity after people find out the bank has a problem. So I could give you guys some timeline of this event. In March 9th, Thursday, shares of the Silicon Valley Bank, the SVB, began going down sharply. And then right after the company announced that it has to raise a lot of capital from selling stock, issue new shares. And then it triggered panic selling, not just this for this stock, but all other regional bank. And then the problem is since Silicon Bank is one of the biggest bank in Silicon Valley, many of those tech company and the startups company deposit their money into the bank. So they need to get their cash to pay off their responsibility. And on Friday, they could not do so. And let's come to on Saturday, March 11th, the CEOs trying to raise 1 billion through the weekend to support the day-to-day operation. But obviously, he has failed to do that. And then the regulator comes in, and then the regulator tell the employees that they need to stay for at least 45 days to make the transition because the bank, the regulator is going to wind up the business. And then some very big company, tech company like Roku, Roblox, and other, they start disclosing their exposure into the bank. They tell the investor how much money they put into the bank. Even in Hong Kong, there's quite a few biotech company. They have used the SVB as a major bank. So they all issue announcement on their damage or on their risk, the money at risk. And then it's spread to UK side. The UK department has to shut down, and then the government finally asked HSBC to buy the SVB UK division for $1. And this actually triggered another sell-off on Monday because it is not a very good business to go into for HSBC. So on Sunday, March 12th, Yellen says to the governments, they need to try to help the bank, the depositor, to avoid the bank run on Monday when the market open again. So they team up with the Federal Reserve, and they put up a new facility for not just Silicon Valley banks, but all other regional banks. And that facility actually just like printing money from nowhere. And then that actually give Monday market a break, because people now, at least they think those banks, even they were just shut down, but they would reopen and then could let the depositor to withdraw the money. And then on Monday, HSBC just announced the deal, and then the stock price went down a lot for 2 days, and also during that weekend, another bank, Signature Bank, which is one of the biggest crypto-friendly bank, also go bankrupt, ceased operation by the authority. So you could see this chart actually on the top up here is the volatility index. You could see on Friday it was quite normal. It's sitting at 18, and then just on Friday, on Monday, it shoot up back to 29. And then at the same time, that 3 days, this part is the S&P 500 index. It's dropped from 4,000 something to 38,000. It's like a 6-7% drop in only 2-3 days. So the whole thing triggered a very big panic selling. So the other events I think that we need to mention is from today and tomorrow, there will be a FOMC rate decision coming out, and the streets actually expect the federal rate will increase by 25 basis point only. Previously, the people think that 50 basis point could be on the table. But after this incident, the bank shut down and things like that, this crisis, everyone start to think FOMC may just maintain raising the rate at 25 basis point. The problem is, even though the Fed wants to stop the rate hike, it could not do so by just one meeting, because it will send a very panicked, very unfavorable signal to the market. So basically, everyone now is expecting another 25 basis point increase. But at the same time, inflation is still a problem. So it's a very kind of mixed situation. If there's a crisis out there, and then inflation is still a thing that the Fed need to fight for. And but on the other hand, the Fed arguing that the system is still strong and resilient. So the Fed is trying to separate the crisis and the fighting inflation in different game plan. So if the Fed stop to raise the interest rate, it will send a very bad signal and let those investor outside thinking there's much more problem than existing. So I think FOMC will avoid that, and they keep and also FOMC tomorrow will likely telling the market that they have different kind of monetary policy tools that could counter this risk. They could give a very special facility to those banks with the money problem, and without interrupting the rate hike. So the market actually still expect another 3 expect another 325 basis point increase in 2023, but also it will expect 325 basis point cuts in 2024. So overall, the cut will be 3 times next year, and then will increase by 3 times this year. So right now, all the Fed decision making will become very data dependent. It will have to keep looking on the job data, CPI, PPI. The Fed need to know that CPI and PPI should not rise back to 6.4, and then the job data should have very good improvement in the future. Otherwise, they could not just keep raising the rate at this pace, and they will fail to fight for the inflation. Right now, this chart is a market expectation. You can see 75% of the people actually think that the rate is will increase to 25 basis points. And we could think about the FOMC rate decision through those quotes from the governor, from those Fed officials. Just as like below, he will continue to say that the Fed will have to work to do on the inflation front, but it will have to be data dependent, and arguing that the project in the dot plot are not commitment, and that FOMC will be flexible about changing the target rate. So another question is, will the quantitative tightening change? I think the market will say it should be end this year, but it all depends on the data. Because if the Fed have to provide liquidity to the banking system, it's actually increased the risk of inflation, and then it's also increased the risk of the financial development might have a slower pace to fight inflation. So right now, if the Fed raise the interest rate too fast, it will create a very bad impact to those regional banks' balance sheet, because most of the regional banks, they hold a lot of subordinate debts, bonds, and then once the interest rate go up, all the bond price should go down, and it will hurt their balance sheet. And then in a way, they could not raise capital easily, because they have to follow the Basel treaty agreement. They need to fulfill their assets base if their assets become going down too fast. So actually, FOMC, the Fed is has to be very careful about how to raise the target rate. So right now, there's two charts in front of us. It's the federal assets. Like last time, it was at 8.7 trillion, and right now it's dropped back to 8.3 trillion in the early March. But just in a very short time last week, the federal bonds has been expanding again by 297 billions. You could see it right here, just by 1 week. It has been erased all the quantitative tightness through almost like from November. So, but this is not quantitative easing, because this amount is actually used to cover those banks as assets. So right now, the market sentiment is very sensitive to economic data. It will be very alert on those CPI and PPI readings, and also other banks' credit rating, because it could spread out another financial crisis if the rate hikes going too fast. So in the next 6 months, the market should be very volatile until we find out US is in recession, and then federal government could do something to fight to make the economy going back up again. So before that happened, people were still guessing how far or how fast Federal Reserve will raise its interest rates, and that's why the next 6 months should be very volatile. The Fed should avoid the liquidity crunch, because right now most of the regional bank people are putting money out from those regional and mid-cap bank, and then putting money to the big one like the Citibank, Bank of America, and JP Morgan, like that. But those banks also have another issue, because inside the balance sheet, they still have some bonds that are not very safe. So if the Federal Reserve increase their rate too fast, we could expect there will be more problem from the financial sector. And now I would like to introduce some themes, theme that for investment in Hong Kong and China. Right now, for the past 6 months actually, the state-owned enterprises actually outperform most of other company, especially outperform those tech company and many other consumer sector company. And I would like to tell you guys the rationale behind this, why this is happening, because the government repeatedly during the past year has signaled that they want to have a great reform on their state-owned company, those listed and non-listed, and they call them the Special Reform Project of Science and Technology. The key terms is each of the state-owned enterprise, they need to put in some new technology advancement into their incorporate into their business, and then they need to look into their business model. The government encourage those SOE management to find out those inefficient, ineffective assets, and then they need to reform it to make the long-term loss financial function go away through selling off those shut down those bad division, and then they encourage the SOE, between the SOE they encourage the horizontal asset restructuring. They're asking those SOE to focus on the main business, use technology to enhance their efficiency, and then they also ask them to use assets integration between those SOE to find out which small SOE is not good enough. Then they have to absorb the big one should absorb the small one, and the government is doing so by giving out equity incentives to the management, and then they encourage those companies to spin off the subsidiary to the market to realize the gain. By doing this, there's another side that the government is actually asking SOE management to do. They actually need them to focus on creating value, and then they want those SOE to return those value to the shareholders, which means the central government. And that's why in the past 2 years, most of the SOE has a very high dividend dividend payout, and also the dividend is very good. On average, is above 6%. Even the bank have 3-4%, and then for PetroChina is went up to 8% dividend per year. That's why SOE company has been outperform the market for the past 6 months. Now I would like to talk about sector rotation. I think there's not many things in the market that is for investor to safely make a long-term investment. One of them could be state-owned enterprise SOE with high stability and good dividend, such as China Mobile, PetroChina, and the Shanghai Coal Company. You will see most of them has 6% or even 8-10% dividend payout, dividend ratio. And then another sector investor could trade is a technology company, but only those with innovative ability, like the Baidu, which is one of the best AI play in China. And then Bilibili has a lot of intellectual property that can transform those property into game, mobile game. And also another sector worth to take a look is the utility with new energy concepts, such as China Resources Power 836, Huaneng 902, and then the Longyuan 916. These are the traditional company. The first two is the traditional coal power company, but with substantial investment in new energy. And then the last one is a pure play of the wind farm energy. So what I'm thinking is during this market, even though the market is not very good, but there's always some sector outperform the other one, but it's not the same all the time. Sometimes I would say if people think that the markets become volatile, they will go invest into the SOE, and then once they find that the risk is okay, they could take more risk, then they will buy the tech. And then in between, the utility will benefit from some economic data, and also benefit from the government policy focused on new energy. So this is the three sector I think investors should take a look, and then avoid the other, like those consumer products or other tech that heavily lean on those consuming business. Okay, so before I finish, I would like to have some thoughts on the Hang Seng Index for the next month. I think the Hang Seng Index will very likely trade in the next month during this within this channel. It may, if the market crash again in the US, it will test the 18,000 point. But if everything is good, I don't think it could break out the 19,900 points. So very likely for the next month, the index will trade, Hang Seng Index will trade near this level. But the tech has another story. If if USI is not that bad, and then actually if the US dollar remain weaker than expected, we could see a very nice rally in the tech sector. But if not, if US dollar is still in a very good uptrend, that's been the interest rate in US people, at least they think interest rate will remain high. Then I think the Hang Seng Tech will keep testing the 3,600 points around here. But I don't think it will have a further downtrend, even though the US have the problem. So we could go into the question Q&A section now.
Some questions. The first one is from Seong Kok Tan. Always lovely hearing from you, Seong Kok. What is your view, Mr. Johan, in regards to Tencent and Meituan's quarterly results, which will be released this week? Will you foresee within street expectations, as both have big impact on HSI movement? I've also sent the question to your WhatsApp, Johan, so you can have a look over there as well.
Hi, I think Tencent's very likely the Tencent's earning should beat the market, because at this level it's actually went down a lot in the past 2-3 months already. And then the government is actually releasing those game licensing for 3 months now. And as Tencent should be one of the biggest beneficiary for the gaming license release, I think the gaming business is doing quite well last quarter. And we should take a look at that part. And then I think the other side of the earning people should be worried about is the advertisement from business, because for the Q4 the lockdown is the most severe in China. During June, July until October, even the Shanghai has been shut down. So I think the Q4 advertisement business should be very bad, but I also think that the market has been already expected. So yeah, I would say the Tencent should have a very good performance after the Q4 full year earning released.
Wonderful. Another question by Seong Kok Tan. Canada just released CPI, which is lower than expectations. Actual 5.2, forecast 5.4. Is there any correlation with US CPI?
I think it's not that closely related. Basically, the oil market has been dropping for almost 2 months now. It was testing the $60 and $64 range. So I think the CPI has reflected that. And I don't think the US will follow that much, because US another problem, the component of the CPI is heavily related to the rent and the wages. And that two part is not very easy to come down. So the CPI, as I know, the street expect is coming down. The growth should come down very slowly instead of dropping quite fast, like the Canada part. Yeah.
Wonderful. I have a next question by Yok Lung Liao, I would imagine. Hi, Mr. Johan Lee. If China invades and attacks Taiwan, what are the trading strategies you would apply? Thank you. I like that way of thinking. Immediately is thinking, how can I benefit this for myself? Not the greatest situation, but a good way of thinking.
Okay, I really don't think that will happen, but people will keep trading this idea. And then, of course, we need to prepare for the worst. So I would say if you think this will happen, you long gold, you long silver, you could long, I mean, you could buy gold and then silver ETF, and then you could buy US dollar. Yeah, that's the main thing. And for equity, I don't think there's any way to hide. Of course, you could buy the military stock in the US to hedge that, but that sector is quite pricey right now, I think. Yeah. There's one sector I actually doing some research lately is the food processing sector. You could take a look at PepsiCo, Tyson Foods, and Coca-Cola. These three companies doing quite well, and I don't think the market has priced in the business efficiently right now.
Pardon, I didn't catch the last words. You don't think they've priced in which parts?
I don't think the market's pricing the business quite well right now. I think they are quite underlooked.
Undervalued. All right.
Yeah.
All right. Interesting. Another question by Stephen Lai. A question for Mr. Johan. In a recent interview with Fox Business, he actually put the link in our comments. Billionaire investor Mark Mobius says he can't get his money out of China as the government is putting all sorts of restrictions on foreign investors. Given this recent development, do you think that investing in China is still a good option? Please share your thoughts on this. Thank you.
I think when you say investing, do you mean buying those Chinese stock, or are you really going to do business in China?
I think in his case, he's talking about investing in China, as in using equities or financial products, not so much doing business.
Yeah, I think it's just like investing in any other country. It depends on the liquidity, the yield, and then the market sentiments. I didn't think right now at this moment China has a big problem on those issues, because as that program went out last few weeks ago, the government contacted the investor and then tell them what to do, and then he already give out another announcement saying that things are very well now. There's no need to be worried. So I think there should be some misunderstanding between the banker and the investor. So I think Mark Mobius just had a very unfortunate event at that time, and it shouldn't be a big problem.
Stephen Lai did clarify, buy China stocks. That's correct then. All right. Next question, Seong Kok Tan. Will you see HSI go below 14,597 points this year? What is the target range this year? 17,000 to 25,000 for the Hang Seng Index. Because we all remember that last year, 2021, you gave a phenomenal target price. You actually did say 16,000. So, and you actually hit that TP. And we always remember you hitting your TPs, Mr. Johan. So, Seong Kok Tan is asking, do you see it going below that price?
I don't think we will test again the 14,000, but if something went wrong, I think very likely we will break 18,000, but it will not hold there too long, because as I said, if you look at the index component, most of them are very cash rich, and then the dividend yield is high. And then the most important thing is US right now is tightening, and if you read the headline, actually since Q4, actually China is keep pumping money into the system, even though it do not make the stock market doing very well, but at least I think the quantitative easing doing by government, even though they don't admit that, could actually support the economy quite well. And they have a very low target of GDP 5% this year. And I think it's very realistic, and I don't think there will be too much surprise in the China part this year. Yeah. So
When you say, just to clarify, China is pumping money in, they're not doing any QE the way that the Western world does it. They don't print their money, they don't do that kind of stuff. How exactly, for our viewers, can you tell them, are they pumping money into the markets?
they encourage the bank to borrow money to the mid-cap company. I mean, small business, and by lowering their reserve ratio, and also they have facility to encourage the bank to borrow money to those rural country business, not the big corporate. Yeah. So it's quite different. Instead of in the US, they do it by buying corporate bonds of the big corp, and then let them raise money through the market. Yeah. So it's quite different from the US side.
All right. So, but I think I just want to clarify for Mr. Stephen Lai's, Siong Kok Tan's question. So the big question is, Mr. Johan, are you bullish or bearish on the Hang Seng this year? That's the big question.
I'm quite neutral at this moment. Right now, 19,000, I don't think is too low, but I don't think the market could easily go back up to 20,000, 22,000.
All right, we hear you.
If you say that there's a range, I will likely saying is 18,000, and then the upper bound is 22,000.
Beautiful. Thank you. We have a question from YX. Will the distribution of Meituan shares by Tencent have any impact on Meituan in the short term?
Sorry, the first sentence I missed it.
Will the distribution of Meituan shares by Tencent have any impact on Meituan in the short term?
I think it's already reflected into the stock price. And actually, Meituan has another problem because the government is not encouraging those tech companies to do. They don't encourage those companies to use their ability to dominate the market on the retail consuming business side. So these kind of business like delivery, telling people where to consume, is actually not the focus on the market for the government. And the government has explicitly tell those exchange for the new listing, they should let those new energy company go listing first. So it's very clear Meituan is not one of the business that government wants to support, and the competition is quite high, yeah, and the cost is rising. So even though the distribution of the shares has been priced in, I still don't think Meituan is a good investment this year.
All right, so what is it's a question from Isabel, okay, not from the panel, not from the viewers. So what exactly do you feel is the government's agenda currently? I mean, previously we heard President Xi, he's gone on about for China, he wants shared prosperity, this kind of thing. And like you said, the banks are encouraged to lend. What is the government trying to achieve?
I think they want stability for the people. So I think they want people to enjoy low cost of living, maintain. I mean, at least maintain. So if you see Pinduoduo, Jingdong, two, three of those e-commerce, they are actually having a price war between those three. I mean, I think it's about 2 weeks ago. One of the platform tell their customers that if you find out you could find a cheaper price, they could refund it back to you, and that's actually make those three companies collapse in very short term. So yeah, so the government, I think they want people to live happily in China, so they don't want to encourage price going up. So I think this kind of business is quite difficult in this kind of environment.
All right. Seong Kok Tan, he actually wants to interrogate you further. So I'll interrogate you further on his behalf. All right, Johan. So he wants to know, after hitting 22,700 points on 27 January, markets have undergone a correction. 6 weeks now, 3,870 points. Is this near the bottom soon? If yes, can we start buying call warrants? Is his question.
I think the index may maintain its very narrow ground, but as I mentioned in my slide, I think the sector rotation will keep going on. So the three sectors that I introduced may not going up altogether, but they will switch around. That's why we say the sector rotation. So I think technically, if you find a comfortable price in range for HSI, you could buy a call, but you don't expect a buy and hold strategy for that. Yeah.
All right. So you're telling us to look more into single stocks first, and when there's some stability in the market, then after that continue with Hang Seng Index warrants, right?
Yes. And in a shorter time trade, maybe. Yeah.
All right. Yeah, we all like to have a bit of confirmation before we give advice, right? So we want to see some confirmation candles, and then only we'll consider that a reversal. Francis Wong has a question. Bank runs are now happening in the US. Like you mentioned beautifully and you summarized for us, Mr. Johan. Will this reverberate to the banks in the region, and how do we protect ourselves in such a scenario? Which asset classes should we invest to protect our money? Thank you.
Yeah. Well, when you say spread to region, means to Asia?
Yeah, I'm guessing he's talking about Asia.
Yeah, I think Asia is fine because the regulation is a little bit different in Asia. Just like in China, I think it behaved quite well because like last year, government already put a investigation team into all the financial institutes, and they sit there for 1.5 months, and then they caught a bunch of officials that have wrongdoing, and then they keep watching their balance sheets. So I don't think, at least in China, part the bank is quite safe, and also for the insurance company. If you see the price action last week, when the US has a bank run, actually it was the HSBC and then the AIA dropping a lot more than other Chinese bank, because these are the less regulated, less behaved financial institutes. So investors scared that they may hold some of those U.S. Regional bank notes. So yeah, so they sell their shares last week. Yeah. So I don't think it will spread in short.
All right, then just to drill down from Francis's question as well, which asset classes should they invest in to protect our money?
I think gold and silver is actually doing quite well. surprisingly, like because few years ago, when there's inflation, people keep saying that gold is a good vehicle to hedge the inflation. But actually, it didn't happen. What happened is Bitcoin and crypto doing very well for a few years, and now the crypto thing has been quite quiet recently. Even though it has been rebound from low, like more than 30%, I think. Yeah, but at this moment, I see gold has a very nice uptrend, and then I think the market's coming back and realize that when there's instability and inflation come together, those precious metal could protect their wealth. Yeah.
All right, we have a next question from Chong Comfort. Will gold go above USD 2000?
It's actually very likely because if people think that the Fed will cut interest rate next year, and then there's still inflation, and there's a lot of risk in the market, I think one of the safe bet is to buy gold or silver. Yeah.
All right, and I do believe it is our final question from Aliza Ali. What is the Hong Kong Exchange and asset management companies like yourself? What is your view on IPOs in 2023? Has investors' appetite in Hong Kong capital markets returned to pre-COVID eras?
I think Hong Kong IPO market will be way better than 2022. And I think it will follow the Chinese approach. Those IPOs should be very focused on maybe biotech and some innovative business. So you will not see, of course, you will not see some brand name stuff coming listing. And also, other than IPO, I think the other side is there will be more stocks be introduced into the stock connect. So that means there's a lot of stock that has been already trading in Hong Kong Hang Seng Index, in Hong Kong market, but later on will be included so that the mainland investor could buy directly from China. Yeah, this is another thing that investors should take a look.
Is this something that your capital management company is looking into as well?
Yeah, what I said as yes.
Yeah. All right, so we have a bit of insight there from you, Mr. Johan. And also a follow-up question from Aliza Ali. How do you see the shift in interest towards SGX affecting this? Do you think there's any competition?
Competition between?
How do you see the shift in interest towards SGX?
SGX?
Singapore Exchange, the STI.
Okay.
Yeah.
Well, I think on the capital level, I mean, the money flow, yes, there's a big competition between these two cities. But for equity market, I don't think there's a problem. Yeah, people go to Singapore, they invest in business and also properties instead of buying their listed company. So I don't think there would be a huge competition between the two cities on the financial side. Yeah.
All right, clever question. I think that wraps it up for us, Mr. Johan. That's the last one. So everybody, thank you so much for joining us. We'll have Mr. Johan back again next month if he's willing to grace us with his presence all the way from Hong Kong. Thank you so much, Mr. Johan, for your time. We really appreciate it. And we really look forward to hearing more of your insightful comments as the market progresses for 2023.
Thank you, everyone. Thank you, Isabel. Thank you, Fernanda. We'll see you guys next month then.
Bravo. Thank you so much, Mr. Johan. Yay! Alrighty, so now we've already covered the first bit where Mr. Johan gives you a commentary on the markets. And right now we're going to go into how can you actually take advantage of what he said. So structured warrants is where we are starting now. We've covered this already. So for those of you who've actually if you know structured warrants and you've actually attended these webinars that we've done, you will know that Mr. Johan does market color, and that's something new every single time. But for structured warrants, we're going to give you a few insights on how you can trade a bit better. Today, we're going to focus on Hang Seng Index. I'm just going to give you 2 or 3 little tips that I've noticed over the past 6 months since I've seen you last. I feel that everybody has already kind of have a very good grasp on structured warrants. You guys are trading very well. So if you're a beginner, first time seeing me and Mr. Johan, please press B. If you're intermediate, please press I. If you're advanced, please press A. If you're very beginner, you have no idea what we're talking about, please press V. And if you're extremely advanced and you just came to see my beautiful persona today, you can press A. So at least I know who we're talking to today. So disclaimer, you can see over there, nothing to cover much, you can read it. I'll send over the slides to our Kenanga Telegram. That is Naga Warrants, no, our Kenanga Warrants Telegram. That is our Naga Warrants by Kenanga. We usually send the slides there. I see Chong Comfort, B, Francis Wong, B, all right. So maybe you guys know the markets, but not so familiar with structured warrants. Fair enough. That's it, huh? Everybody else, I'm assuming, is advanced. So for the beginners, you can always see my slides. We have them on our YouTube as well. And I've covered all of these things. So I won't really want to jump into too much of that because I want it to be an early night for you guys. We've got many more weeks coming up. So get in touch with our previous slides and our videos on Kenanga Group YouTube. All right. So over there, we've got a beginner video that's 1 hour long and advanced video that's 1 hour long. That's chopped up into many bits. And we cover all of these beginning things, what we've done over the years, our Bursa Excellence Awards, our SRP Euromoney Award last year, the big idea on how warrants relate to your portfolio. But I'm just going to assume that a lot of you are actually trading warrants already, since I see a few Bs and everybody else seems to be quite familiar names. So for the beginners today, maybe we can cover some beginner stuff next week. But I just want to cover these things first for those of you who've seen our webinars before. So the live matrix, you can see that for Hang Seng, it shows a bit differently. For Malaysian equities that we mainly cover, you can count the ticks by saying if it's 6 ringgit, 601, 602, 603, that's 3 ticks, right? We've already learned that last year. But if you're looking at Hang Seng Index Live Matrix, the way you calculate it is you take the top and the lower band and you minus it. So you can see that some Hang Seng Index warrants, they can be 30 points for it to move 1 tick. Sometimes it can be 60, sometimes it can be 90. So we're going to cover that in just a moment. And what we're going to do is I'll show you how some people actually trade using these live matrices as compared to just eyeballing on the market like other issuers. Sometimes their live matrix isn't so updated and you can't really plot and you don't really know where the Hang Seng Index is. But as we're sorting out that technical difficulty, I just want to remind you that if you're trading Hang Seng Index, you should be aware that it follows the Hang Seng Index futures price. And these future contracts, they are actually going by month. So let's say January, it's 1 contract, February, 1 contract, March, another contract. And for some of you, the new ones who are joining us today, the beginners, keep in mind that Hang Seng Index and Hang Seng Index futures are slightly different in pricing. So you can ask your broker to give you a Hang Seng Index futures feed. So if you're using any of your CDS platforms, you can be using RHB, Maybank, CIMB, Kenanga's TA, M+. All of these brokers, you'll be able to trade Kenanga structured warrant because the warrants are listed on the market. Number one, you can ask your broker for a Hang Seng Index futures feed. Or number two, you can consider something like TradingView or SI Station, which is slightly pricier, but they offer you a lot more capabilities than that. So I do recommend starting to ask your broker to get you these things. So back to the slides. Thank you, guys. As you can see, whenever you look at the Hang Seng Index matrix over here, I can easily eyeball and I can tell that this matrix is about 60 ticks, 60 points for it to flip. All I did was minus, when I look at HSI CLD, which is one of our popular warrants as well, this is the underlying bid price. This is Hang Seng Index Futures, the bid. Here's the ask, and here's the warrant bid. So this is CLD's bid, and here's the ask, or the offer, as some people call it, right? If I don't know how fast the warrant moves, then how do I know when to take profits or when to stop loss? So if I just really quickly look at it, I look at 184 minus 142, that is, that's about 40 actually. So that's about a 42 tick warrant, or 42 points, whatever you want to call it. If I just quickly minus this one, it is about 40 as well. So I know that for me to actually make money, I need it to move about 40 points. So let's say for Hang Seng CLD, if I actually, this is the current price. I screenshot this yesterday, Monday, as I was preparing for this. So anyway, 18902 is the index futures bid and ask. So what happens is I can actually buy the warrant at 7.5. Why would I want to buy it maybe at 18,860 when I can just wait for it to go to 18,900 just before it flips from 7.5 cents to become 7.5 on the bid? Then I know actually I got it right. You know what I mean? I wait for the last moment. It's like when you're going to event and you want to be a VIP, then some people walk in at the last moment. Maybe like that. So I would consider that. I would enter the last moment so that I'm as far away from my stop loss as possible, but having a low price as I entered. Maybe I put a stop loss here at 6.5. Correspondingly, I know the Hang Seng Index futures is going to be at 18,792, and maybe my TP is about 300 points up. So I know that's a 10 cents. My warrant should be 10 cents on the bid if it's intraday. So the same thing goes for, let's say, HSI COC. I can look at it that way. I wait for it to go around this price. But all of it is really subjective because you can't really imagine it. You can't be looking at your computer screen, the TradingView platform, and then looking at the live matrix on www.nagawarrants.com live matrix as well, right? I mean, unless you've got like 5 monitors like me. So my concept is over here. So the first tip that I actually want to cover for this section is consider superimposing your live matrix. Now, how do you superimpose it, right? Let's say you've got your HSI HKL. Right now, we're looking at puts a lot because you can see long term. Let's just go through the technicals first. The long-term support and resistance, you can see over here is that line. Here are your moving averages, this pink color line over here. Your long-term moving average. And we can see that, hey, you know what? I consider a put warrant, right? Because what do we see over here? Downtrending, fine. So let's say, for example, if I'm looking at a downtrending put warrant and I've already got my warrants matrix up on one side, what I have seen some people do and what I like to do as well to have a bit of an edge and a bit of a quickness is I actually pull up and I draw these lines. So this orange lines that you see over here, I would actually draw them on my trading platform. And you can see HSI, HKL, this warrant, when it is, let's say, $21.5, 19,044 here, then I would have plotted over here, for example, this line. So I know that it corresponds to this line. When I know it's flipping down to the next level, let's say 19,017, then I will actually draw that line out. Do you see that? Does that kind of make sense? You know, I just kind of superimpose what I see in Live Matrix onto my trading platform. And the reason I do that is so that I can chart better. I can see that, let's say, for example, I'm actually over here. This is a one-day intraday chart using yesterday's prices. This was on the 20th of March. I actually did over there. I sourced my chart. And what happened was Hang Seng went down intraday 19,200 to 18,900. That's 300 points down in one day. And if you're saying if 300 points, what does it mean for me? All I did was calculate the ROI. So that's 22 cents on the warrant. 22 minus 18 divided by 18 is 22%. That is 22% in a day gains. And all I had to do was look at this. So let's say I like charts, right? So let's say what I did was I noticed in the morning, double top over here, and I don't trade yet. I need confirmation. That's my favorite word. If there's one word that you need to learn from us today, it is just wait for the confirmation. Let the dealer, let the market reveal his hand to you. And then you take action, okay? Don't try to presume or preempt or imagine what they're saying. Watch for confirmation. So we see over here that it was downtrending, and then that's a confirmation, right? The lower high, it was a lower high. It wasn't a higher high. It was a lower high. And then you notice that over here, it wasn't higher as well. So perhaps you would have entered a position over here, the big blue arrow. And then if you're following my tip for today, for you, the second tip is to actually consider following Bollinger Bands if you're trading intraday. I find that extremely useful. So when you look at Bollinger Bands, you would see that Hang Seng, whenever it touches, it actually does rebound off the Bollinger Bands quite well, for intraday charts at least. So let's say, and if you actually plot a moving average, even better. So let's say you entered over here, it hit the average and it just continued going down. These highs, my plus signs, they actually just mean they're my own annotation for just saying, take notice it didn't go higher, take notice it didn't go higher. So then it just followed, checking the bottom of the Bollinger over there. Easy. What happened over here? Right, it did not go above that high, and then it continued as well, tracked lower and lower and lower through the day. So that was from 9:15 in the morning when the Hong Kong markets open up, and then you just watch it the whole day, and what happens was at 3:15, something interesting happened. So we can see the previous one was here, that high. So I'm actually monitoring this price already. Every time it goes lower, I monitor a different price. Every time it goes lower, I monitor a different price. So what happened was it went lower lows, which is beautiful over here. But then you notice that it started to test, so you just wait it out, right? But the second it actually breaks through, retraces, then I'll consider closing my Hang Seng put position. So let's say if I actually picked it up, I wasn't the best trader on that day. I didn't buy at the high over here. I didn't sell at the lowest of lows. I actually just caught this middle ground here. And that is already 22%. And when it has something that is pretty fast, like HSI, HKL, some people, let's say for Justin over here, right? It's quite difficult to set profit or loss, stop losses. And I agree with you, Justin. Sometimes you actually place a price on your broker and maybe Hang Seng just touches it. And the thing is, this live matrix, issuers are not obligated to buy. It's not like I'm forced to buy back that price because it's on the live matrix. It is an indicative price timetable. So let's say even if it touches for 1 second and there are people in front of you, your price might not be executed, unfortunately. And that's how it works for even local equities as well. You might be queuing behind somebody else, right? If there's 10 million queuing to exit at, let's say, 22 cents, it won't all get done, right? So let's say if you are like Jason, and I'm the same as well, Jason, I find some warrants too fast for me. I can't even key in the price onto my platform to exit, so let alone I'm halfway plotting, I'm watching the price, and then suddenly it does a rebound like this in the span of, let's say, even 1 hour, right? When markets reopened at 2:30, all the way to here, maybe it's about 1 hour and you're just unsure. It looks like it's sideways, right? Like a range bound. Who knows? It could have gone lower even, right? So suddenly it does something like this and you feel, okay, you know what? I better get out. I would consider maybe using a slower warrant with more ticks. So you can see that HSIC HKL, this one is pretty fast moving. This one, let's say 85 minus 56, that's about 30 points for it to move. And if Hang Seng can move this much intraday, 30 points is not even one candle, right? This is 30 points. This one candle is already more than 30 points, right? How can you press fast enough, right? I get you, Jason, I get you. So my suggestion is to consider using something maybe a bit slower. Let's say HSI HKR, which is a different warrant. It's also a put warrant because pink are for puts. For the Kenanga warrants, we actually say pink is for puts, so people will notice that it's actually a put warrant if you don't notice the H over there. And the normal ones, which are call warrants, as you can see, they're black, like black pink. Black is for call warrants. You can see this black part here. And pink, which is the H, is for puts. Just for the beginners today. I know I'm going pretty fast for the beginners, but I just want to give the guys who are advanced something today, and we'll go through the beginner stuff next week, okay, when we're back. All right, so the HKR. So for example, if I'm looking at HKR, I can really quickly see that HKR is a much slower warrant. 90 minus 80, that's about an 80 points warrant, right? 80 points or so. 78 minus 8, that's about 70. 70, 80, it depends, right? So let's say, even if I'm looking at something that is not as fast as just now's HSICLD, and I want to be able to, press, and I still want to make money, right? So let's say I did the exact same trade. I notice double top here. In the morning, I waited for a nice confirmation, and then I was like, hey, you know what? These two are lower than before. So I consider entering somewhere around here perhaps. And then I know that for this HSI HKR, I've already plotted according to my tip just now, which is to superimpose the live matrix onto your trading platform. I know every day it changes a bit, but you got to do some work. Wake up at 9, get ready at 9 a.m. to 9:15. That's more than enough time to superimpose while you're waiting for the market to open. So let's say over here, 19308. You can see over here it's 19308 as well. And what I did was, it's going to be at this price, 9.5. The warrant is going to stay at 9.5 until it flips down this number, right? Then it goes to, from 9.5, 10. Or let me make it clearer for you. 9.5, 10. And then when it flips down to 19307, it goes to 10, 10.5 cents, right? 10 on the bit, 10.5. and it stays there for 80 ticks, 80 points. And it only flips down at 19,228 over there, the next level. Right, 19,228 and then 19,151, then it goes lower. And then 19,078, well, 7978, you know? And then 19,008, that kind of thing. So that's what I would really recommend doing if you are, you want a bit of clarity, then at least you know. For example, if you actually picked up the call warrant over here, let's stick to put warrants, I won't confuse you. So let's say around this area, when I mentioned earlier that you saw the price continue to hit down, it follows the middle of the Bollinger Band. Over here, that's the orange color one. And you see it touching above. It didn't go above the whole time when it was dropping, but suddenly it starts to do this. You notice that suddenly it decides to cross the Bollinger Band. You see that? The middle of the Bollinger. It starts to trade at the high of the Bollinger Band. Then you know that a reversal is coming. Go read up about Bollinger Bands. They are incredibly useful if you're trading Hang Seng intraday charts. You can thank me later, okay? So Bollinger continues over here. That's the middle of the Bollinger. And you can see there's a reversal already here. Right, before that, let me make it even clearer for you. Bollinger Band. Maybe we don't use this color. Over there. You see how the price only cuts the Bollinger Band upwards over here. It was trading below. It was a ceiling that the price could never break up, right? But suddenly, the price decides to do this. And it starts using the Bollinger Band as a support. Then you know, trend has changed. Something is going on in the market, right? So let's say that happens. And I have something like a slower warrant, then I know that here is supposed to be 12.5, 13. I can actually take profit at 12.5. So I know that this whole range, this whole time, my price is still 12.5. I don't have to overly panic. Maybe I didn't exit at 13 over here, but never mind. At least I can exit at 12.5 and I know I am safe until it hits 18,939 or so, right? 18,938. If I know it's a bit complex for you newbies, but I know I see some familiar names. If everybody is okay, please press okay in the chats. If you've totally wiped out and I've confused you, please press KO. But this is really for the more advanced friends that we have who've been joining our webinars over the years. I just want to give them something a bit different to take home before we actually proceed with the newer stuff next week. Everybody okay? Ui Hong Kor okay, Mark Gaw okay. Wow, Mark Gaw, big boss in the house. Stephen Tan okay, Jason okay, Valen Chiang okay. Fantastic, guys. All right, so we've already covered those bits. So today, the little things that I wanted to cover for warrants was number one, how to use the last defense using the Hang Seng Index. The cheat code is, the tip over here today is count points. So the easy way to calculate that, I can tell the difference between HSI, HKR, and the rest, is I just minus one from the other. 78 minus 8. I know it's 70 ticks. Easy. Then I know if I'm someone a bit slower and I like to take my time and I don't like being whipped around by the market by every single tick. You know, let's say, for example, if some people were like, some people don't really mind. They're not so fussy about every single cent, right? They just want to get trend correct. You see this one, for every single tick that moves, it is really fast. You see, even from, let's say, a rebound. Let's say you tried to exit. You could have exited over here at 23 cents. But then you didn't manage to key your finger in time and it rises up to 22. That's within a span of like 10 minutes, right? So if you're not always monitoring and you're not as quick and you're not as aggressive and watching the computer screen every minute of the day, I don't assume you are, then you go for something a bit smaller, a bit slower, more ticks. And the same thing remains. Even if it's 300 points down, it's still 22% ROI. We always say ROI is a magic number. And even if it's 300 points down, it is also 22%. So you can choose something a bit slower. You don't have to be overly aggressive if that's not your style. So the 3 tips that I wanted to share with you, and then we'll go into Q&A today, is number 1, count the points. Like I said over here, count it, make life easier for yourself so you don't get whipsawed and thrown into a milkshake and get confused. If not every single time the Hang Seng does a little slight rebound, you get panicked and you get out of position, and then you actually miss the entire run because you chose a product that was too volatile for you. You couldn't handle it, you know? Some people, they choose products that are just too fast for them and they can't handle. And that's fine. There are many other products which are slower that let you take advantage of the move as well. Second thing I wanted to cover was, I'll cover this next week with you guys, is look at the long-term support and resistance. So what I really love to do is look at the moving averages. You can see my moving averages. I think I did, I think this is a 100-day and a 50. I'll double check with you. I'll get back to you guys. I'll write it out in the Telegram group, the moving averages that I use, the green color line. Usually I do annotate it, but I forgot this time. So look at that, look at the moving averages, and also look at this really long-term downtrending line. My drawing is not great, but it will do for now. And I do like talking to myself as I trade. So you can see that whenever there is a confluence, we always cover a few things happening at the same time, then it gives that technical indicator or technical drawing more power. So for example, if you have something like this, you already know that price has cut down the moving averages. That's a bearish signal. And then followed by the price and the long-term moving average and the long-term blue line. Those are 3 things, right? Number 1, you got your moving average telling you it is downtrending. Number 2, you got the long-term resistance line, which is downtrending. Then you know this was a pretty easy play for it to be downtrending, right? A few things at the same time. And then when you see that it doesn't even cross this one, a few things at the same time. So what we're seeing is, like what Johan said earlier, right now we're at this point of indecision. So until that is actually a bit more clear, I know what we can see is it looks very bearish at this point, which is nice for people who are trading put warrants. Like me, I love trading put warrants. You can actually consider re-entering positions or just start monitoring first. Choose a warrant if you want a HKR warrant that is slower, or you want a different warrant that is faster. You know, start to already choose a warrant that is suitable to you. HKR or HKL, that is totally your choice. I hope that answers your question, Jasin, in a slightly longer way. So the first tip was to count your points. The second is to look for confluence, right? That means several simultaneous things at the same time, like Michelle Yeoh's movie, Everything, Everywhere, All at Once. Stuff that happens together at the same time. That gives your technical indicators more power and give you more confidence and more probability of success. And the third thing to consider from today's session is the superimposing the live matrix. This is the first time I'm actually telling you guys that this is an interesting way to actually trade. Look at the live matrix in the morning. Every morning it comes out at, like Mondays, it comes out 7 in the morning. There's a new live matrix every single day, right? Because of time value decay, because the Hang Seng is volatile overnight, the futures are open overnight. So 7:52 a.m. in the morning it comes out. 7:52, maybe say 8 a.m., Hang Seng opens at 9:15. Consider plotting already. Just draw the line. Use your technical. I wrote all of these in like 5 minutes. All right, you don't have to write all of them even. If you use something that's a bit slower, let's say HSI, HKR, you only have to plot a few lines. So you see, it doesn't hit there yet. If you're buying the call, let's say over here, you saw that this is a reversal, and you went into a call warrant. Then you can see that over here, you can still exit at 11.5, this whole range. You have more to play with. You don't get panicked out. Because sometimes when you key in buy orders on your trading platform, and then you have to go and lower it, or plus a bit more, or lower it plus a bit more, you can make mistakes. So we try to avoid making mistakes, right? The market is tough as it is. Let's try to avoid making additional unnecessary mistakes. All right, so that ends my session. If you have any other FAQs, head over to the YouTube. We've actually covered all of these questions in our previous webinars, but this year, we'll be focusing on revisiting a lot of these basic topics. Today's topic is a bit advanced, I know, but you'll be fine. The first time you watch it, you only understand maybe 40%. The second time you watch it, maybe you understand 50. Third time you watch it, you understand 70, So keep at it. Do I have any questions before we wrap things up tonight? I know I've given you a lot to think about, and we're going to actually start doing. We've actually done one talk last week, and we've got 14 more webinars to go this year. So if you have no questions to ask me, don't worry about it. But if you have questions, please ask them in the chat. If you are confused beyond relief, can you please write confused? If you got it, please press got it, so I don't feel so lonely talking to myself, even though I've got Andrew, Gary, and Edmund here to accompany me today at our fantastic studios. But let me know. Jasin, when will it be uploaded to YouTube? That's a question for Edmund, actually. When would we like to upload it to YouTube? This week, Jasin. Because it takes time for us to get the file and send it over. Hui Shen Liang, got it. Liang, wow. Stephen Tan, got it. Ui Hongkor, got it. Megan, got it. Jason Tan, got it. Mark got it. Mark, of course, you got it. Thank you. Valencian, got it. Fun webinar. Very good. Thank you. All right. So anyway, we wrap things up. I know I didn't want to go too much into detail on the niches of structured warrants. Next week, we'll be covering what to do during expiration. Do you actually buy a warrant? Do you actually hold a warrant to expiry, or do you sell before expiry? What's your strategy? I actually do the calculations to show you on how you can assess whether you want to hold or not. And then we'll also cover a bit more into the intrinsic value, and also a bit more into the beginner stuff for you beginners out there. So let's see, Jason Tan, US market open now, HSI look positive. Fantastic. Then consider looking at what it's gonna close at 2-3 a.m. tonight, and whether tomorrow you want to enter into a call warrant. That's how a trader's life is. If you're looking at intraday positions, then you just look at how the market closed overnight and what Hang Seng Futures did. And if you're like me, you like to analyze the charts, you can notice also, Jason, that in the morning, the charts like to pop up maybe 50 points. And if you have a position overnight, sometimes there's a great chance to actually exit a position. So just an additional tip for you is, let's say, I don't have my full software here, sorry. But let's say in the mornings, Hang Seng loves to do this. It was trading over here, roughly at 19,200 the night before, and suddenly it loves to pop up in the morning. So if you're trying to exit a position, then the morning time, 9:15, 9:16, is a beautiful time to exit sometimes. And if you're trying to enter into a position, so Jason, let's say if you want to take profits, exiting in the morning is beautiful. If you actually want to enter a position, just wait and see. Just wait for 9:15, 9:20, 9:30 to settle around. Let the market reveal its hands to you. Let it show you and tell you, today I feel like it's going to be a downtrending day. Let it show you, let it confirm like that. You know, don't stay up all night, Jason, looking at the US futures markets or the Hang Seng futures. You'll go crazy. I've tried doing that last year. You will trade very badly the next day, I can tell you that. So if you're actually looking at the Hang Seng futures overnight and you want to trade the next day, I don't suggest it. Choose either one. You know, if you're trading futures, stick to futures. If you're trading warrants, stick to warrants. And warrants offer leverage that futures cannot. So you don't even need to monitor the whole day. You just need to monitor a handful of hours, 3-4 hours, and then see there's an opportunity. In the morning, if the market does this, pops up, and it just trades like that, close your laptop, go watch a movie. Justin, yeah, Hang Seng has been difficult. One day up, one day down for the past few days. So like Johan said just now, it is doing its range-bound trading, right? If I have my long-term chart, yes, beautiful. So this was until yesterday, and I know today it was somewhere here as well. So you can see the range is somewhere around there, right? My lines are not very good when I freehand it. 19,690 and maybe somewhere around there, 19,000, right? And if it's just this range-bound kind of trading going on, then you just wait for the market to tell you in the morning, 9:30, dear Hang Seng, what are you going to do today? When it reaches something like the bottom, then you consider entering. You don't go and enter over here every single time. You know, you don't try to fight the market and say, oh, you know what? It looks like it's popping up over here. It looks like over here, you know? A lot of people will enter into that, and that is what we call a bear trap. I mean, a bull trap, right? This is a bull trap as well. This is a bull trap as well. It's a trap for people who are overly bullish. The only way to confirm for Jason is to wait for the candle to either break through like this. Then there's a rebound, right? You can either, there's two ways to buy. You either buy on dip, which is somewhere around here, and you consider adding positions around this point, or you buy on breakouts, which is over here. So there's two entry points. If it's somewhere trading in the middle of this range, of this beautiful range I've drawn for you over here, right, then just relax. All you have to do is just wait and wait for it to reach the price that you want, which is say 19,000. That's it. You just, like, there's a trading quote, you just wait for the money to be on the ground and you just go and pick it up. That is really it. You don't have to trade every single day, even if you are an intraday trader. All right? You don't have to trade every single day, even if you plan to do intraday trades. You just wait and you monitor. Anyway, doesn't look like there's any more questions today. Maybe I've overwhelmed you enough. Take Tan. Hang Seng Index has an inflection point at after 10:30 most of the times. Yes, great observation. I noticed the same thing as well, Take Tan. After 10:30, there is a different kind of season. So Hang Seng, sometimes it has different seasons through the day. The joke that I have is that Hang Seng can be spring in the morning, summer in the afternoon, winter, and then back to spring at 3:30 to 4. You know, Hang Seng is like that. But yes, 10:30. I love that you noticed that as well, this Take Tan. I don't have a very good chart example here, but maybe I'll post some extra charts next week. You know, here's 10:30. Sometimes it has a really crazy behavior after 10:30 or before. I always look at 10:30, and sometimes I try to take a break so I don't get stuck. For example, the Hang Seng could have easily gone like this. I don't want to be stuck thinking it's going to be a downtrend the whole day. So 10:30 is a beautiful time. I'm glad you noticed that, Take Tan, to actually reassess your positions. 10:30, go for a walk, you know, go to the restroom, go and have some breakfast, have a coffee, and then come back and see whether it is still downtrending, uptrending, or range-bound. I have nothing to say. That's a great comment, Take Tan. I appreciate it. I love that you guys actually have these kind of comments for me. Keep them coming. When I see you guys, I believe, I'm not sure whether it's going to be next Thursday. It should be next Thursday, our webinar. but I'll send out the invites once we have it confirmed. Next Thursday, or when we have our next session, please bring in these insights that you've shared over, and I'd love to hear more from you guys, all right? So without further ado, that wraps up tonight's session. I will see you next week. Thank you very much, and have a great night, guys.